Good afternoon, everyone. This is Chip Rogers, President and CEO of the American Hotel and Lodging Association. Thank you for joining us today in the latest of AHLA's COVID-19 webinar series. Today's webinar will begin with a presentation from the Small Business Administration on their efforts to support the small business community during this turbulent time. Following the SBA presentation, Brian Crawford, AHLA's Executive Vice President of Government Affairs, will provide an update on the third phase of the COVID-19 congressional relief packages known as the Coronavirus Aid, Relief, and Economic Security Act, or the CARES Act. Now, before we get started, I want to remind everybody that this webinar is for the hotel community. It is not intended for members of the media. If you are a member of the media, please disconnect at this time. COVID-19 is a rapidly evolving situation. AHLA continues to work closely with government officials, public health leaders, and industry experts to help keep you informed and to share tools and resources which will help you and your business. We encourage everyone to visit our website regularly at ahla.com/COVID-19 to receive the latest resources for hoteliers. We also request that you sign up for Hotels Act, which can be found at ahla.com/HotelsAct, so that you and your employees can receive the latest updates on legislation which is impacting your business. Hotels Act is free, and it is the single best way to help advocate for you and your business. Now I'd like to turn it over to the Small Business Administration for their presentation. Following their remarks, we will open it up for questions and answers, so please use your Q&A box at the bottom to submit your questions. Today we are very honored to have Rosemary Drake. She is the Chief of the 7A Loan Division. Rosemary, I will now turn it over to you.
Thank you so much, and we do appreciate the association joining us on this call. And as you know, legislation has not been passed, so we will not be speaking to any proposed legislation. It is a very fluid, moving legislation, and changes could be made at any given time. So a part of our conversation today is really to answer some of your questions. Some of the questions we received were about, existing loans that you have that may be SBA loans. For also pending loans, how do you apply for the stimulus loan program, whether it's the Paycheck Protection Act portion of it, or whether it is a loan for the operations of your business, and what are the moving parts to that. We are working on policy now for any type of legislation that would be passed, so that we would work with our current participating lenders, as well as lenders that are not currently participating in our SBA loan program, so that you would be working with your existing financial institution, and they would have the ability to deploy the funds and work directly with the SBA for the guaranteed portion of those qualified loans. And so I would like to first talk about our disaster loan program, which is the one part of the program that is up and running and has been up and running since it has been declared a national emergency. So if you are an existing business, of course you can qualify for our economic injury disaster loan, and that would help you with your immediate working capital needs. The disaster loan program is a direct loan program from the SBA run through our disaster portal. You'd be able to go to the website to apply. And just recently, we've been told that the website had been down, but it is back up, and they're currently processing, and they're bringing on new people just to help with the process. And so, just to give you a little bit of information on the economic injury disaster loan program for working capital needs for small businesses, a part of the requirements that need to be met from a collateral standpoint, a credit standpoint, is we look at the historical credit history of the applicant business. We would also look at the historical repayment ability of the business as well. And for Collateral, we look to collateral for what collateral you have, but we would not decline a loan solely based on the collateral. The interest rates for the EIDL loans for the life of the loan would be fixed, and it would be fixed at an interest rate not above 4%. It would be fixed for 30 years. Again, if you are applying for the EIDL loans, it would go up to $2 million if the statutory loan limits on the EIDL loans. And the EIDL loans will look to the affiliate businesses. As you're looking at the proposed legislation is not going to look at affiliation with regard to the proposed legislation. As a part of the EIDL loan program, the statutory limits of $2 million will look to the affiliate. It's looking at the applicant business and the affiliate business. The EIDL loans also require guarantees, personal guarantees on all of our EIDL loans. Where you look to the proposed legislation is looking to no collateral or any personal guarantees, again, and then the no affiliation as well. And so with regard to the EIDL loan, to get more information, you can go to disasterloan.sba.gov/ELA to apply. You can also go to disaster customer service at SBA for additional information with regard to that. The customer service number for our disaster area is 1-800-659-2955. When you go to the SBA's website under disaster front page, you'll see all the areas that have been declared, presidentially declared emergencies, and you can determine if your business sits in that particular area that has been declared. Again, your governor has to submit certain information to have that area declared. As you know, most of the areas that are currently being declared are going to be done by states. Historically, with disaster, it's done by counties. In this particular pandemic, it is being done by state. I don't believe we have someone on the line from our disaster area, but we will also make additional information available to you at a later time. There has been some questions about if I qualify for an EIDL loan, will I still qualify for the stimulus? There's a time frame in which you apply and be accepted into the EIDL loan program that you would still qualify for the stimulus. But once the stimulus and legislation is passed, you will have the option of using the stimulus, whatever the proposed plan would be, or using an EIDL loan, but you would not qualify for both after the passing of any legislation. So that is in general about what's currently available. For all of you on the telephone that particularly may have an SBA loan, our current SBA lenders have the ability to defer loans up to 6 months that are not sold on the secondary market under their unilateral authority. We've given some guidance to all of our lenders on what they need for deferment. So if you currently have an SBA loan, you can reach out to your lender and they can provide you with the guidance they need. We have provided them additional guidance on the no adverse change that they need to validate to SBA. We've provided guidance to them on that as recent as today. So I want to provide you with that information as well. I know that many of you may have large facilities, and so we have another program that may not meet your exact needs, but it's something that our existing SBA lenders that have the authority to do our SBA Express program. We have what we call the SBA Express Bridge. It is a program that has been extended to 2020 for this purpose to include presidentially declared emergencies, where it provides for no collateral. It still will have the same parameters as our 7A loan program, but will allow you to have an immediate need of working capital to your business not to exceed $25,000 for those of you that have smaller operations that may need it for your business immediately, and then you would reach out to your existing lender to actually facilitate that as well, because that program is for your existing lender. I'm going to take a pause before I talk about the Payment Protection Act to see if there's anyone from SBA that has joined on the line that would like to add anything else to the call. I believe Briggs has joined the call.
Yeah. Yes. Hi. Thank you, Rosemarie. This is Bill Briggs. I'm the Deputy Associate Administrator for the Office of Capital Access, and I want to thank everybody. The administrator asked that I jump on this call personally and address the folks on this call, the hotel owners and lodging owners. I'm very aware of your trade association here in Washington, D.C. They're doing a great job. And right now, I know there's a lot of interest in what Congress has done, what current resources are currently available, which is some of what Rosemarie just talked about. I think for a second what I'm going to do is kind of start from a larger perspective of this is a novel coronavirus situation. It's a novel situation, and we've really never faced a pandemic like this before in modern times. And so we are trying to do, and President Trump is trying to allay the full resources of the federal government to, one, fight this national emergency or this virus, but then also do everything we can to protect small business owners and their employees so that, they don't succumb to the after effects and economic shock of the situation. And so Congress has obviously been working on this stimulus legislation. And the general sense is there's a widespread recognition, particularly in the hospitality, tourism, and trade industries, or industries, quite frankly, that benefit from people when people move around or travel or see stuff. And that is you guys, or go to conventions or host trainings or whatever reason somebody goes to a hotel. That is you. But the key ingredient is that people move and need a place to stay. And obviously, if almost half of the country's population is on lockdown in some form or another, that's a serious situation and with devastating impacts. I've heard directly from some of the CEOs of the leading trade associations and leading hotel chains, in particular, some of the folks who have the small and medium-sized hotels, and very clear about the economic impact and how it's essentially dropped off a cliff. So I want to say first thing is that we're aware of this dramatic situation that is particularly impacting the whole hotel industry. The second thing I want to do is make sure that you understand where we are right now, which is some of the resources that Rosemarie just talked about, but also the larger picture of where we are in terms of this process now that Congress has passed this is about to pass, the almost $2 trillion legislation. There are many significant things within this law to digest. We are digesting them ourselves as an agency, and then trying to draft guidance to essentially give to the lenders and the lending institutions, because the lending institutions will be on the front lines of this fight to preserve small businesses and their payrolls and their employees as well. And so what we're trying to do right now as an agency is provide guidance or draft guidance, consider the implications of many different angles from many different types of small businesses, and say, how can we provide guidance to the lenders so that the lenders can comfortably begin to provide capital, and how can we do this yesterday? And we are right now working on that. We are scaling our operations and all of that, but the way we're going to do that is that you should be engaging right now your local lender. As Rosemarie may have said, if you have an SBA guaranteed loan right now, your lender in certain instances has the ability to defer for a certain amount of time. Generally 3 to 6 months. It depends on the type of loan and if it was sold on the market. So do not hear that it's 6 months, hear that it depends. But the SBA lenders without SBA's approval can defer for a certain amount of time. You should be talking to your lender about this. Chances are, too, if you have an SBA guaranteed lender, you should also be talking about this once the program is finalized and the guidance is issued to lenders. That is where we are working on right now. We are working on making sure that our field offices then are aware of the guidance and how the program works. And then we are also aware of trying to make sure that all the lenders across the country, including those ones who are new to SBA loan programs and not historically been involved, are able to help disperse some of these funds. That is kind of the big picture, and I know folks on the phone and I know the hotel owners in particular are struggling, and the money can't get there quick enough. So that's the big picture right now. I think that I'll kind of leave it there from remarks. I know we have some questions as well that are coming in. Maybe that would be the best use of our time, is to try to start answering some of the questions that we are getting from the folks. So, Chris, do you want to do that, or do you want to, make remarks, or? Nope.
Hey, Bill, this is Brian Crawford with AHLA. Thank you again for jumping on the call and for all of your efforts. We've gotten an overwhelming number of questions that we're going to do our best to capture them, and then we'll send them to you in writing and try to get with you guys in terms of guidance. But I do think that there are a couple of questions that might be helpful, and I know that our CEO, Chip Rogers, is on the line. I think he might have some questions as well, but I'll just start. I think some folks have had some questions, and you already touched upon this, but if you already have an SBA loan through a lender, you're recommending that they go ahead and reach out to that same lender and begin the process of setting up for once this legislation is passed. But there won't be anything that prohibits somebody that already has an SBA loan from being eligible under the CARES Act. Is that correct?
That is our general understanding, and I just want to they should be talking to their lender, one, to potentially get a deferral on their loan right now. They were able to do that 2 weeks ago. We reminded lenders 2 weeks ago of their ability to independently do loan deferments. Also, too, though, yes, they should be talking to them in anticipation of the lenders being able to provide this program.
And just for clarity's sake, the SBA size standards for hotels are for 500 employees or less, and then $35 million in revenue or less. That still applies under the CARES Act, correct?
Generally, I have not heard significant changes to the small business size standards at this time.
Okay, great. Chip, do you have some questions?
Yeah, got a couple, yeah.
Go ahead.
Again, thanks for this. This is fantastic. So what information let's say you do not have an SBA loan right now, but you're going to need one. What information should you be gathering to make this process as quick and as painless as possible?
Rosemary, I think you've had some more insight to that. Can you take that?
Yes. And so we are working on a limited application for submission, but the general guidance that we're giving with regard to going to your current bank, whether you have an SBA loan or not, because again, this will be rolled out for individual companies, sole proprietorships, as well as businesses that do not have an SBA loan. So a part of it would be looking at your financial statements over the last year and year-to-date, interim financial statements year-to-date, looking at your payroll costs, your rent, your operational costs, mortgage payments and interest expense, looking at your utilities, looking at some of those things from your financial statements and pulling that information together, any type of payments you've already made to the IRS and such other agencies, pulling that information together, determining, kind of what your need has been, not based on a pro forma, but based on your history. So you're really pulling together your current information. Again, the proposed legislation would not have any personal guarantees and would be 100% guarantee for that particular period. So it's really pulling together your financial information over the last year, starting back to February of 2019 up to this current period, and looking at the period that's impacted, and if you have seasonal business because you're at a resort someplace and it's a seasonal business, looking at that seasonal period for your business from February to June of last year, where we would look to what your payroll and your expenses would be from that period of time. That's kind of the best way to do it. Also, look at your current systems to see if you can upload that information, because this process will all be done digitally.
That's great information, and that was really one of my next questions. Is it going to require someone to go into a bank, or can all of this be done online? And I think you just answered it. Everything's done digitally, correct?
That is the goal in this current pandemic situation that we have throughout our country. We're definitely doing social distancing, so it is important for our lending platform to work with the business owners electronically. There will be borrower certifications included in the proposed applications that will be rolling out. So you as a borrower will be making certain certifications to make sure that you attest to that information is true and correct. So we will be doing that, and we're working with our lending platform to make sure the Know Your Customer aspect, which is required from their federal regulators, would be met, and how we would work to incorporate that in. So as much information that you can provide your lender that you can say, okay, I'm verifying this is who I am, this is my business, this information is valid and correct, and provide that to your lender. It definitely will streamline the process, and it will cut down on the time to process this. All of our lenders will use our electronic platform to process it, but they will be using our systems as well. So they'll be providing limited information to SBA to get a number to make sure that they can deploy the funds as quickly as possible. But a lot of the onus will be on you as the borrower to get that information in as quickly as possible in a format which we will provide you additional guidance as the legislation passes.
So you mentioned lender a number of times. Where could someone find the list of SBA preferred lenders?
SBA preferred lenders are actually listed on our website. If you go to SBA.gov, we have a national platform that you can look at lenders nationally. You can also go to put in your zip code where you're located, and it will bring up our lending partners that service your area, but it'll also bring up our other SBA resource partners as well in your area. So that's one quick way to find out lenders in your area. And then we also have resource guides placed on our website that will list some of our lenders as well. With regard to existing SBA lenders, the first part we're telling you is if you currently have a banking relationship, to look at your current lender or your banking relationship. If you don't have a lender per se, or you don't have a banking relationship, we wanted you to go to whom you have a banking relationship with, because they're going to know you as a customer. They're going to have information on you, whether it's your deposit account or if you have some other type of credit line with a potential financial institution.
So I know we're running out of time here. You guys gave us 30 minutes. We appreciate that. One other quick question, and I'm not sure if there's an answer to this, but if there is, I'm sure you'll give it to us. Once someone submits their information, typically how long would they expect, how long would it take to get an answer?
Chip, this
so
is
that is
Bill Britt.
Go ahead, Bill.
Chip, it's good to hear you again after all work on TRIA, by the way. But the simple situation is that part is going to be too on the lenders to try to get that out and just process. I mean, they are warning us of the crush that they expect themselves, especially the largest institutional lenders have let us know about that. But I mean, our goal is that sooner rather than later. And so I can't sit on this call and say you're going to get your money in 48 hours like some folks on the Hill might have been promising. But we are working as quickly as possible to get this money out. We know the sense of urgency. We have heard the concerns, particularly from the hotel owners they said, 2 to 3 weeks from closing doors permanently. We are working night and day to try to avoid that and get that capital to you guys via the lending institutions.
Excellent. Thank you. Brian, did you have another question?
Yeah, Bill and Rosemary, thank you again. I've been scrolling through the questions, and again, we're going to capture them and try to send them over to you in written form so we can get some of these answers. A couple of things. A lot of folks are saying that they've began the application and that the website has crashed. I think you guys are already aware of that. But could you repeat, since we don't have slides right available, can you just repeat the website and the URL for the disaster loan and where folks should go so that they can jot that down again? Again, we will post this all information available on our AHLA website once we get it from the SBA. But just since we have you guys and I'm seeing the questions, if you wouldn't mind repeating the URLs for both the disaster loan and 7A information that you guys recited earlier.
Okay, this is Rosemary. I'm going to pull that information back up. If you will bear with me for 1 second. I have multiple screens up trying to provide you with that information. So
while she's doing that, I can say definitely the primary resource for economic injury disaster loans is sba.gov/disaster. Even if you go to sba.gov, you will see very quickly, disaster loan information. You'll see the image of the coronavirus. I mean, that is where you click to learn more and go from there. So it's 1 or 2 clicks in to start the application process pretty quickly from sba.gov.
That is correct. So there is a link on our website, and to apply directly, you can go to disasterloan.sba.gov/ELA. For the customer service number, it's 800-659-2955.
Great. We'll post that on our website as well so that everyone can access that.
Okay, and just to be reminded, that particular website is specifically for the Economic Injury Disaster Loan Program. It is not for the proposed legislation package that we are looking to provide additional guidance. That particular program will be delivered through financial institutions that work with SBA, not a direct SBA loan program. So it would not be for the EIDL loan program. Just want to make sure that we're clear on that.
Got it.
Yep, we are.
Thank you for clarifying.
I'm going to recap this real quick and make sure that everything I'm saying is correct before we let you go. Disaster loans, as you just mentioned, Rosemary, are up and available right now. SBA Express Bridge loans of working capital up to $25,000 you can get through your existing lender. That's available now. If you do have an SBA loan, you should have already contacted your lender to talk about any deferrals that you might be eligible for. The best thing you can do in preparing for the CARES legislation, assuming it gets enacted into law, is to begin gathering all of your financial information so that you can fill out those applications as quickly as possible with one of the hundreds of SBA approved lenders. Is all of that accurate?
That is a great recap.
Okay. All right. Well, listen, thanks, Rosemary and Bill, so much for your help. I know we will be talking to you again soon. And as Brian mentioned, we will be sending you lots of questions in writing, and hopefully we can take those answers and get them back out to the thousands of people that are listening right now. So again, thanks for your time this afternoon.
Thank you. We appreciate you all.
Thanks. And with that, I am going to turn it over to Brian. There's been a lot of activity over the last few days happening in Washington, D.C. As most of you know, the Senate unanimously passed late yesterday or last night, maybe this morning, the CARES Act, which is of great interest to everybody on this call. Brian's going to update us on that, some of the concerns we have with it, and what is expected from this point moving forward. So, Brian, all yours.
Great, thanks, Chip, and thank you all for being on this webinar. Again, we will capture that information from the SBA. We'll make it available on our website. I did see lots of comments about the fact that their website is crashing, that you're having problems with the loan applications. I would expect that will be a situation as we move forward, and so we'll work with them and try to get that fixed. But certainly the key takeaway is to begin talking to your local lender that you've worked with on SBA loans, or identify a local lender through their website and take those steps that Chip talked about. All right, so in terms of the legislation, if we go to the next slide, Chip already touched upon it, that the CARES Act was passed by the Senate finally last night, 96-0. The bill now heads to the House, where we expect that they will take it up tomorrow and pass it by a voice vote. And by voice vote means that they will not, the House is not going to come back into session. All the members are not going to fly to DC. Whatever members are available, they're going to go to the floor, and whoever the presiding officer is, which will likely be the Speaker of the House, will call for a voice vote, and she'll say that the yeas have it, which means that the bill will be passed and be sent to the president. There's 4 major provisions or buckets of information in the CARES Act, and for this call, the second one is arguably, or the first one is arguably the most important. There is $350 billion available through SBA programs, various loan programs, both the 7A loan and the disaster relief program, which will be paid through the federal treasury directly to local lenders. And that's the most efficient and expedited way to get the money into your hands. Now, there are specific guidelines for how much each company will be eligible for, and I saw some questions about that. So within the CARES Act, and the reason why the SBA people were not willing to speak to it is because it hasn't been signed into law. It hasn't passed the House, and it hasn't been signed into law. Once it is signed into law, they more than likely they will have 10 days to do an expedited or emergency rulemaking process where they're going to lay out how this whole program is going to work. But within the program, small businesses are eligible for up to 2.5 times their monthly payroll, or up to a maximum of $10 million. We had concerns about the 2.5 times payroll because we don't think it's sufficient in terms of the challenges that all of you are facing right now. But we were told by the Senate and leaders in the Senate that 2.5 times payroll was the maximum amount that they could provide based upon the $350 billion that is available through the SBA program. There's also $10 billion for SBA emergency grants of up to $10,000 for operating costs. An additional $17 billion for the SBA to cover 6 months of payments for small businesses with existing SBA loans. But the key thing here is that you're eligible for 2.5 times your monthly payroll. That'll be determined by you take the average of your monthly payroll over the course of 2019. That will be the information that you submit to the SBA. They will give you, your local lender will then be able to float you to that amount, 2.5 times your average monthly payroll. That can be used for a variety of different things, including maintaining your workforce, your payroll, but it can also be used for rent or interest on your mortgage, utilities, and other parts of your debt service equation. Again, we raised with the Small Business Committee and the Senate that 2.5 times payroll was insufficient and that we wanted it to be 4 times operating cost. But they told us that would have equated to about $1.2 trillion in spending, and that the Senate was not in a position to pass that, which is why we're at the 2.5 times payroll. In addition, within the bill is language that we helped secure, which disaggregates hotel properties from their employer. Previously, the way that the SBA program worked was that it was the SBA size standard definition was 500 employees or less, or $35 million in revenue. But in the hotel industry, as we all know, there are hotel owners that would own multiple properties, each of which are independent. They might be franchised through different brands. And in the aggregate, they would have more than 500 employees, and thus would have been ineligible under the previous language for an SBA loan program. Within the bill, there is language that makes the eligibility requirements per physical property, meaning per hotel, so that each individual hotel can apply for the SBA loan regardless of whether or not in the aggregate their owner or their employer owns more hotels that equates to more than 500 employees. The goal here was to create a scenario where more hotels were eligible for the SBA loan program, because as we know, there are 54,000 hotels in the United States. 33,000 of them fall under the SBA definition of a small business. But because of this drafting situation, some of those would have been ineligible for the SBA loan program based upon the fact that they shared an owner, and that owner in the aggregate had more than 500 employees or more than 35 million in revenue. So we think that that's helpful language, and again, we'll work with the SBA to ensure that the intent of the law is carried out in the loan process. For Title II, this title deals mostly with the checks to the American people. So, you know, the Treasury is going to be handing out checks for $1,200 to those individuals that earn less than $75,000 a year or $150,000 as a couple, plus an additional $500 per child. Also included in this title are a number of tax provisions, some of which will be beneficial to the hotel industry. In particular, they are delaying quarterly estimated tax payments. They're deferring payroll tax for the employer side. They're allowing for 5-year carryback of net operating losses, which is something that AHLA lobbied for. They increased the Section 163G business expensing from 30% to 50%. There's an employee retention tax credit, which allows employers to take a tax credit for those employees that they keep on their payroll. And then finally, there is a tax provision dealing with the qualified improvement property fix, which was included in the tax law of 2016, but that allows for increased expensing of capital improvements within your hotel. Many of you have probably paid taxes under the QIP that you can get reimbursed now that this fix will be included in the bill. Next slide, please. The third title dealt mostly with funding for the hospital industry, $100 billion for hospitals, extra funding for more PPE equipment for hospitals and healthcare provisions, healthcare workers. There are a couple of provisions in there regarding labor. One was paid leave for rehiring of employees, allows an employee who was laid off by an employer to have access to paid family and medical leave. There's also an advanced refunding of credits for employers that can be reimbursed on the front side. I saw one question during the webinar for SBA about questions about collective bargaining and unions. And there is a provision in the bill that deals with labor neutrality, but it is, from what I can gather, it is ineffective in that it is going to have very little impact. It does not require neutrality for anyone taking out a loan. It doesn't require labor neutrality for people that are operating in the SBA program. I'm going to find out more information on that, but I did see the question, and I'll get information on that and share it with the group. If we go to the next slide, the fourth area of the bill is the economic stabilization package, which is $500 billion through the Treasury Department, and that will be for those businesses that are not eligible for the SBA programs under Title I. So the way that Congress did this was that they were trying to create a pool of money, a pot of money that's dedicated for small businesses that larger businesses won't be able to access. And then there is a separate pool of funding for larger businesses that ostensibly smaller businesses will not be applying for. Within that $500 billion, there is dedicated funding for the airline industry and air cargo carriers. So $25 billion for the airlines, $4 billion for cargo carriers, another $17 billion for businesses that are important to maintaining national security. So that leaves $454 billion, which will be available through the Fed and the Treasury, and they will be lending that directly to banks and financial institutions. Again, the regulations regarding this economic stabilization fund have not been written. The legislation stipulates that that the Treasury will have 10 days to draft regulations on how they're going to implement this program. My guess is that it's going to take some additional time because something like this, massive, is going to take some time. But essentially what they're going to do is inject liquidity into the market directly through institutional lenders. They'll have some sort of application process available where you're going to have to prove economic harm. The Secretary of the Treasury is going to have a list of eligible industries, which undoubtedly the hotel industry will be part of, and that will open up lending opportunities directly, liquidity and lending directly through banks, FDIC, lending institutions, and other financial institutions. Again, these will be loans. These will not be grants. None of this is a quote unquote bailout. Most of the funding that's available through these bills will need to be repaid. I will say that in the SBA portion of the bill, that there is a caveat that if the loan that the business receives is utilized to pay for the wages and payroll of their employees, that it can be converted from a loan to a grant, which would be good for many of you on the call. So that's the latest as it relates to the CARE Act. If the key takeaways are that there are a couple different buckets of funding, $350 billion for small businesses, which again, according to our data, 33,000 hotels would fall under the SBA definition of a small business. So we believe that the majority of the hotel industry will be able to apply for the SBA loans and receive some help through the SBA program, notwithstanding the challenges that they're going to face trying to administer a loan program of this magnitude. And then the second bucket of funding will be through the Treasury Department, and again, through the Fed releasing liquidity into the market directly to lending institutions, banks, FDIC insured banks, and others to go directly to distressed businesses that qualify, which the hotel industry will certainly qualify. And then the third piece is the tax provisions. Again, many of the tax provisions will be helpful, but many hotel companies are likely facing limited tax liability in the year 2020. So it's dubious how helpful that'll be. Again, this bill will likely be passed by the House tomorrow, signed into law by the President shortly thereafter. There'll probably be about a 10-day to 2-week window where the agencies have to draft rulemaking authority regulations and guidance on how it's going to work. And then hopefully you'll start seeing liquidity enter into the market and back to your businesses. The other side of the equation that I would just mention is around forbearance and working with the Fed, the OCC, the Department of Treasury, and the SEC around guidance on flexibility and forbearance on your servicing of your debt. We continue to press for those issues, both with the Treasury and with the SEC. I saw a couple of questions pop up about the CMBS market, which is overseen by the Securities Exchange Commission. We have heard about concerns about the CMBS market, and we have sent a letter along with a number of other commercial real estate trade associations in DC to the SEC, to the Treasury, to the Fed, asking them to provide guidance on how they're going to stabilize the CMBS market and ensure that it's working properly moving forward. So I just wanted to raise that for you. Chip already touched upon it, but to continue to get updates from AHLA and engage with your elected officials, please go to Hotels Act at AHLA, at AHLA's website. You can see the URL on your screen. It's incredibly important. Thus far, we've sent over 1,000 emails, letters, phone calls, tweets up to the Hill, and it's having an impact. And the reality is, this CARES bill, which is a massive piece of legislation, is likely only a building block in terms of what else needs to be done. We continue to tell our elected leaders that while we appreciate this effort and the size and scope of the bill, that more is going to be needed, especially for the hotel industry, because the reality is that there's no revenue coming in, there's zero occupancy, and because of that, 1 or 2 months of payroll lending is not going to be sufficient to keep businesses afloat in the coming months. So we're already positioning ourselves for the fourth package of reforms or economic stimulus that the Congress might pass. And we're also thinking through what we need to do to incentivize travel, get the business travelers, get leisure travelers going again once the virus passes. And so, your engagement through Hotels Act is critically important to that. I also wanted to touch upon activity that we're seeing on the state and local level. And as you heard from the SBA, aside from the federal government, it's critically important that we are reaching out to our state and local officials, particularly governors. We've been monitoring legislation across the country that address the coronavirus and the COVID-19 health crisis. And thus far, we've seen over 200 bills introduced in various states, mostly that deal with specifically the public health crisis, but we're also looking at state and local bills that delay various types of business taxes, state and local property taxes, which are going to have to be paid by hoteliers. Obviously, delaying those, deferring those will be of huge help. We're also keeping an eye on relief packages that are being passed by state and local governments, including in Delaware, there is the Hospitality Emergency Loan Program, or the HELP program. In Florida, there are a couple of different bills to immediately help hotels and those in the travel and tourism space. So obviously, we need to continue to work with our governors. We need to continue to work with our state legislatures, explaining to them the critical impact, because there are lending facilities and there are programs available at the state level, on top of the federal programs that could be of assistance to you, and we want to stay on top of that. We're also paying close attention to those states that are issuing executive orders around what constitutes an essential business. We are obviously focused on ensuring that hotels are deemed essential for those that want to be open. And we've also seen that AHLA, in partnership with our partner state associations across the country, launched a program called Hotels for Hope, which is aligning us with local government leaders, HHS and DHS, to help put first responders into our hotels that are currently unoccupied. On your screen is a sample of a letter that the Rhode Island Hotel or Hospitality Association sent to their governor, urging her to deem hotels essential during this health crisis. And there are our partner state association executives across the country are doing outstanding work in working with state and local government leaders to either have hotels deemed as essential or identifying opportunities where hotels can partner with local governments to make a difference during this health crisis, which we're obviously pleased to see. So again, for those of you that have any questions, have some concerns, have ideas on what more we could be doing, urge you to email us at govaffairs@ahla.com. I see on the screen that there were over 400 questions for the SBA team. We're going to capture those, we'll refine them, distill them down, and come up with the questions that we think are most pertinent to be answered for the entire hotel industry, and try to get those in writing from the SBA. Hopefully we answered some of them. But again, I think, Chip highlighted a couple of things that you all should be doing immediately. One is reaching out to your local lenders, making sure that you're gathering information about your payroll, what it looks like. You want to make sure that you're prepared once this program is launched, that you can try to access it as quickly as possible. Obviously, if you already have an SBA loan program and use a local lender, you should be trying to work with them on deferring your payments immediately. We'll continue to advocate on your behalf with Congress. Just know that, this bill, we see it as an important first step, that it's going to inject a lot of liquidity in the market, and it's going to help provide some hope for many of you to keep your doors open, to fight for your business, to fight for your employees. But we recognize that more needs to be done, and that's what we're going to be pressing for with Congress, our congressional leaders, with our governors, and we need your help. So, please sign up for Hotels Act, and continue to advocate on behalf of our industry and help us in positioning our industry for maximum help from the federal government. With that, I might turn it back over to Chip for his closing thoughts.
Thanks, Brian. I appreciate it. One correction, Brian, you mentioned a moment ago that through Hotels Act, we generated 1,000 communications with Congress. That's actually 100,000 communications with Congress. And we need to do more. So if you're listening to this, not only should you please sign up for Hotels Act, it's free, but have every one of your employees sign up for it as well, because I'd love us to be able to generate 1 million communications with Congress for what we will call COVID-19 Bill number 4. As Brian mentioned, there have been 3 so far. There will be a multiple number of additional pieces of legislation that will come out. The next one after this one may take a while, but the more we can communicate, the more we can show strength in numbers, the more opportunities we have to move the legislation, as we did this time, in a direction that will help our industry. So thanks to all of you for supporting AHLA. Go to ahla.com/HotelsAct to sign up. I did have a couple of questions about the SBA presentation today. Please know that when we arranged this presentation, in fact, it was to talk about the emergency program that was already in place before this CARES legislation came out, and to talk about the 7A program in general. It was not necessarily to talk about the CARES Act. Once that is signed into law, I expect we'll probably have SBA officials come right back on and do another webinar to specifically address the CARES Act in greater detail than what we were able to go into today. So please look out for that. Again, thanks everybody for participating. We'll try to answer as many of those questions as we can. This particular webinar, like all the webinars, will be accessible on the AHLA website probably within the next 24 hours. So if you want to listen to it again or send it to anybody and have them listen to it, you can go to our website to do so. Thanks again for participating, and I'm sure we'll be talking again very soon.